Testing, testing. Hey guys, that should work, hopefully. Hello, hello. Is that better? Can you hear me now? Testing, testing. Hello, hey, that should work. Can you guys hear me? Can you hear me? Can you see my screen? Yes? It works? We good? What about camera? Start recording. Oh, fantastic. But you don't see me though, right? First little time tech issue, I guess. It works now, but does the, can you see me? I don't think you could see me, correct? I see your screen slides and hear you, but can't see you. Okay, cool. So thank you guys. You guys are awesome. Let me just figure out, I want to get my camera up and working. Once I figure out how to do that, we'll be golden. It does feel like there's a little lag too between the stream. So just FYI on that one. Yeah, you're not visible. I'm trying to be visible. I'm certainly trying to be visible. I just have to figure out what to do here. Has anybody ever live streamed before? This is new for me. If you have, I'm guessing you're younger than I am. Come on there. Okay, video, 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 video. Yes, yes, hello. Hey guys, what's up, John? I'll be starting in a second, guys. I'm just trying to figure out the video part. Ooh, video. Let's go. How we doing? We have video now? No, we don't have video still. Okay, face. Yeah, that should work. You cannot see me. Hey, now I can be seen. What's up, everybody? Hey, this is very exciting. Now you can see me, we can talk, we can say hi. Fantastic. We'll get rocking and rolling. We'll get, just trying to work out a little kinks here. A few kinks now and there. I do notice that it's a little bit lagged. So that's just going to get, I'm just trying to get accustomed to that. And then in the video description, I added this PDF as well. Okay, and I just keep looking off screen because I have your chat on a different screen than my PDF. So hopefully you guys can access this PDF. So let's start right here. Guys, welcome. Those who got here a little bit early, we did have a few technical difficulties, but we seem to work them out. Hopefully you can see me. Jonathan Rose, what's up? Owner, Masters in Trading. Hopefully you can hear me okay. This PDF in front of you, this slide deck, I put it in the video description below. So you guys can all access that as well. And if you're watching the recording, you could also access that. So start by saying welcome. Guys, can you guys access the PDF? in the video description? Cool. So here's what we're going to do. I thought it'd be pretty cool to give you a good overview of how we approach the markets. And we're going to focus on futures trading for this live. At Masters in Trading, we share option trades every week, but we also teach futures trading. The futures trading that we teach, I was just looking at different lives on the internet before jumping on, different lives, and I searched trading, and all the YouTube lives or all the trading that I came across was people either short-term trading or speculating, maybe a little bit longer term, or swing trading. But everything that I came across was very trading things in isolation, looking for breakouts, trading S&Ps. We do things a little bit differently. And we're going to talk about bonds, bond futures, the yield curve. The reason we're talking about bond futures, there's quite a few reasons, but at the core, the reason my background is in bond futures is in trading the yield curve. And I got into trading when the Fed was moving the first time around from 2003 to 2009. So I started in 97, but 2003 to 2009, I traded the yield curve, and I traded the yield curve because the Fed jacked up interest rates and then reversed course and took them right down. And it was a really, really good trade. And right now, the Fed is doing the same thing. So we're going to talk about interest rates first. Interest rates are a great entryway into what we do, which is relative value trading or pair trading. Because once you can learn pair trading through interest rates, I'm a big believer that you can take that to any other asset class. So let's get going. So a little bit of an overview. In front of you are the rates right now, okay? So we have the 1 year, 2 year, 3 year, all the way out to 30 year. These are the cash rates right now. The Fed is moving rates higher. If you want to borrow money from the federal government for 1 year, 5.25%. If you want to borrow money from the federal government for 30 years, you're going to get quite a big discount. That is an inverted yield curve, where that 1 year, 2 year are so much higher than these that are further out. Another thing that I want to touch on while I have this up is many think that bond trading is boring or not, they don't move at all. Look at this incredible movement just in a couple of days. These are really, really significant moves. Bonds are absolutely moving. So I wanted to grab a few bullet points of what it means when short end rates start going higher. So yield curve inversion risks, the relatively high short-term yields compared to long-term yields, 1 year compared to 30 year. Now, in the past, 100% of the time, this has signaled a recession, going back to the 40s or 50s. Maybe one other time there wasn't a recession, but when we've seen inverted yield curves, in the past, recessions have followed. Does that mean that we're going to end up in recession? Probably. No, but in the past, it certainly has. So the odds are, things are going to be a little unsettling. Impact on borrowing costs. I got lucky that I locked in a mortgage at the lowest rate for a long time, but I know many of you and many of my friends have floating rate mortgages out there, and you guys feel those. They are brutal, right? I have heard horror stories, and I'm sure people are going through them. I hope you're okay, but that does just show the risk that's out there in the economy. Investor sentiment, risk appetite. When short-term rates are higher than long-term rates, it can make investors more cautious because you can get so much short-term yield. Are stocks going to pay more than 5%? Housing market, real estate, this doesn't really play out. Lower long-term yields like the 30-year can make housing more affordable, but 30-year was less. So this isn't even playing out either. So there are a lot of reasons. Again, we've already seen this with some banks, impact on financial institutions. When the yield curve goes inverted, it's a shit show all the way around. It's not supposed to be that way. It's supposed to be less risk for less time. Just like if your neighbor comes over and wants to borrow money. Different rate if they want to borrow it for one day or if they want to borrow it for 3 years. This slide is showing the yield curve. And this slide is showing the yield curve. It's showing 2-year all the way out to 30-year. And think of it like a snake. So 2s, 3s, 4s, 5s, all the way out. That's the yield curve. And this chart shows, and again, you have it, there's a PDF in the video description. Since the Fed has started their rate hikes, they started, which is unbelievable to me. I don't know if it's to you, but they started March 17th, 2022. I don't know why it feels like it's been going on for a lot longer, but March 17th, 2022 is going to be right here. And then they raised, what this is flattening. So this whole thing here is flattening and actually inverting. Okay? So 2s all the way out to 30s, the lower that it's trading, it's getting flatter, but it's actually going inverted. Price is opposite to yield. That's why it's all the way down here. What makes the trading so interesting about when you're looking at interest rates, and why I believe that the core of trading, or I would say the core of my approach after learning how to trade bonds, has been to take this style of, I call it relative value trading, pair trading, it's got a lot of different names, and to build on it, because as you can see in front of you, ZT all the way to UB. That's what this chart is. Okay? So good question. Hey, Chris, flattening and inverting. So if it's flattening, the rates are getting closer and closer together. If it's steepening, the rates are getting further apart. So this is flattening because the 2-year yield is rallying faster than the 30-year yield. But what's interesting about this chart, and this really is what I love about trading, trading to me gets to be very much like golf or even like chess. I equate it to putting a puzzle together, because in front of you, that purple line is ZT all the way out to UB. Okay? It's one long snake, but that snake can be broken up into many different parts. So we can break that snake into 5 different parts, into 10 different parts. And what I mean by that is the purple is ZT all the way out to UB, but these are all individual spreads. So when we talk about putting a puzzle together, if that purple line is rallying a ton, going higher, going higher, going higher, well, those 3 components underneath, the yellow, the green, and the blue, all have to follow it. They don't have to trade exactly perfectly the same, but they're part of it. That's putting the puzzle together. And that's what I teach. That's how I trade. That's how I approach the bonds, and that's how I approach every market. So I wanted to close, I've kind of broke this up into different sections. So in this section, I just wanted to make sure that you guys are understanding the yield curve, ZT going out to UB. Each one of these are very, very liquid tradable instruments. We could trade ZT against ZF. We could trade ZF against ZN. We could trade ZN against TN. We could do whatever we want. All tradable instruments, but we're not speculating on just the direction of one of them. Instead, we're looking at that shape of the entire yield curve. That's an overview of how we look at bonds. In this next section, I'm going to talk about how we trade the bonds, how we look for opportunity to make some money trading those bonds. Let me just check in, guys. Everyone good? You guys can hear me okay? You can see me okay? See me drinking my Dr. Pepper? No? Awesome. Thank you. Is anybody joining me for the first time? Just kind of throwing it out there. What do we have? Like 25 people on. Is anybody just stopping by for the first time who's not familiar with me at all? And just a reminder, guys, the PDF, this PDF is in the chat. Is it not in the chat? Is in the description below. So pressing on, how do we trade bonds? I've been trading my entire career. You have a trading account with a fixed amount of capital. Okay? You have a trading account with a fixed amount of capital. If you're going to make a trade, I want you to love it. Too many trade because their computer's open, because they feel like they need to do something. What I have in front of you is just looking at the implied volatility bands. Implied volatility bands come from how the options are priced. And because of the optionality, implied volatility bands, without getting too technical, are going to act as support and they're going to act as resistance. The reason they're going to act as support and resistance is because traders need to hedge around those levels, okay? People trading futures, as much as we think they're all kids staring at a computer, it's not that way. These are major, major institutional trading vehicles that nobody is caring about little technical analysis patterns, and they just don't. It's such a big, unbelievable market. What you're looking at in front of you is the implied volatility bands. So right here, this little spike, these spikes, this is higher volatility. When volatility comes lower, like it is now, this is lower volatility. Higher volatility, more uncertainty. Lower volatility, less uncertainty. How I like to trade outright futures, if I'm not going to trade spreads, is I'm going to lean on implied volatility bands. And that's what I have in front of you. Now, just so you understand this chart, this is a 2-year chart with the implied volatility bands of the ZB futures. But this is resetting every month. So just so everybody understands this, when it comes down here, it bounces, cool, but then it's resetting. So it stops, starts again here. Here it broke through the bands, but then the next month it resets because there's monthly expiration. And that's how we are doing this here. But I just want to explain to you that it's just not all mean reverting, but what the trade is and why it's somewhat of a predictable trade, especially right now, is since the Fed has been raising interest rates, right? And if I go back here, the Fed has taken rates 1/4 to 50, 5 to 5 1/4 over about 14, 15 months. Once the Fed starts to move, they move. Historically, they absolutely move. Yeah, bond futures expire every month, but we just built it for stocks, so that's why it's like that. So when the Fed starts to move, historically, they don't move once, they move. So the trade for bonds, since the Fed has started moving back here, if you have an opportunity to sell bonds, that's what we want to do. We don't want to buy bonds. We know the Fed's moving, right? Not really looking to get long, but over time, being disciplined when they do trade up to the implied volatility bands, which we've been able to take advantage a few different times, it's an absolutely screaming good trade. But you want to wait. You want to be disciplined. There's a trade if it gets up to the implied bands. If it gets down, probably not. Probably not with the Fed moving. And that's having a plan. Same chart. Same chart. I guess I just put it in twice. Oh, and that's why I went back to get these. That's why I had to go back to the previous slides. But just showing that once the Fed starts moving, and go back and look at Fed's historical movement, the Fed doesn't just move once or twice. The Fed moves because it takes a little bit for the economy to absorb. Just like we do this in bond trading, we then take those same lessons and we can replicate them in different asset classes. Energy futures, there's a really cool relative value trade between heating oil, RBOB gasoline, crude oil. In front of you, the same chart looking 1 year, monthly implied volatility bands. Again, if you take a step back, you can see this time period here is lower volatility than this time period. When the volatility is higher, that just means there's more uncertainty in the market, hence more volatility. But look how oil and RBOB have respected their implied volatility bands. Here's a relative value trade. It looks like they separate with oil weaker, and here oil is stronger. Here oil is weaker. Good trades. Here it looks like it got away a little bit and then opened up down the next month before snapping back. And so that's energies. And then one more example with these implied volatility bands using a 2 hour, I have it on a monthly as well, where we're looking at each one of these cycles is its own month. And we want to look at how the implied volatility bands respect. When there's something like this and a disconnect, that's potentially a trade opportunity. But everything that we do, absolutely, look here, gold. Look at gold trading weak, gold trades strong. If you want to buy something here, you wouldn't buy gold, you buy silver. Platinum. We're buying platinum today. In our Discord, I put in our Discord, I'm buying platinum, ticker symbol PLTM. If you want to do an ETF. There's no options on PLTM, but for YouTube, June 22nd, PLTM, last I checked, it was trading $9. And again, why? Well, because it gets down here. It's going to bounce, or most likely, we'll probably see it bouncing. Triangle trading. So you could be an outright trader and you can bet for the S&Ps to go higher. You can bet for the S&Ps to go lower. You can bet on pairs, Netflix, Blockbuster, something like that. WTI oil against Brent oil. Or you can do it in threes. When you're combining threes, we refer to that as a triangle. When you trade a triangle, you can look at it as 5-year, 10-year, 30-year. Gold, silver, platinum. You can do it solar stocks, different sectors. The point is that we want to chart B against A against C, and C against B. We want to look how that whole triangle behaves against one another. And that's what I did here. Right here is a triangle. And in this triangle, I have two charts actually. I'm going to show it to you this way, and then the next chart shows it a different way. But right here is a chart. It's a 2-hour chart. And right now, I really would like you to just concentrate on the two lines, on the colors of the two lines. I wouldn't go crazy with trying to figure out exactly what it is, because that's not really the point right now. I can tell right away that this is a good trade. The reason I can tell is those two lines are married. They're buddy-buddy. They're married. Where are they going? Every single time they separate, they come back together, right? Every time. And if you go further back, it would be the same exact thing. The reason that's happening is because these two charts are really the same thing. It's the gold one is ZF all the way out to UB. The white one is ZN all the way out to UB. ZF is 5s, ZN is 10s. This whole chart cancels each other out, and it's really just 5s against 10s. And what this is showing, and this was a class that I gave yesterday to our bond trading club, which we call the Fight Club. The trade idea was to play for these two lines to converge, for them to come together. And the way that we do that is we buy what's called the fight. The fight is ZF against ZN. The pink line is ZF against TN. So ZF is 5s. ZN is the 10-year future, which is really like a 7-year cash instrument. The ZN is a 7-year. The TN is closer to a 10-year. Okay? So what this is showing is the 5-year ZF against, let's call it 7 years of duration, the ZN. That's 5s, 7s. ZF, ZN. 5s, 10s is going to be ZF, TN. 7s, 10s is going to be the TEX, the dark blue line. The trade is to buy the fight and to sell the TEX if you wanted to protect your fight. Hey, Chapman, good question. Isn't it the fight, FYT? They call them different things depending on the ratio. For instance, they'll be, I can show it to you as well. Hey, Chapman. Chapman, is this the ICS CME? Chapman, have you been to some of my presentations before? Thanks for coming. So right here, guys, and all I did, guys, I went to ICS CME. And again, I'm a big believer in information is a commodity these days. It's readily available for everybody. Where we can really help is in the community and sharing ideas and making sure that you don't get hurt. So it'd be like this, the nub and the knob, maybe not. But FYT, yeah, sometimes it's maybe a different ratio where we'll see Bob and the bub. So yeah, You'll see two different, I mean, all they are really is it's just made up. When the 3-year came out, we called it the Thrive, and now it's the Tough. So it's just, and guys, all it is, by the way, for everybody, 5-year bonds, 5-year fight, 10-year. So it's just phonetics. Good question though. In front of you is the triangle. Does that make sense when I went over this trade, guys? Does it make sense of how we look at the triangle, how we look at that 5s, 7s, 10s? And if you go back to February, can't you see that these two pretty freaking close, right? ZFZN is in the pink line. So the yellow line is in that pink line. It's part of it. The next section I called relative value and pair trading. Everything that we do stems from some kind of relationship trading, relative value trading. In my opinion, risk needs to be tied down. I don't sleep well at night if I put my family subject to tail risk. Like, I don't want blowout risk. I don't want to pick up dimes and risk dollars. Zero interest. So every trade that we do, in front of you, gold versus silver, it doesn't mean it has to be gold versus silver, but if we're going to buy something, if we're going to buy silver, it's going to be because relative to gold or relative to platinum or relative to something, it's got to be a buy, because you can't have everything be cheap. That's not really a trade. So what I'm showing in front of you is really why I love relative value trading. And this is just the gold silver ratio going back to 1975. This ratio, they have data going back to the early 1900s or late 1800s. And throughout the time period, it stayed between a low of 30 and up until COVID, a high of like 95. Well, after COVID, which was right here, the gold silver ratio jumped to levels that it's never seen in the history of the relationship. Why did that happen? Here's gold right after COVID. Gold goes higher. Silver got smoked. Silver sold off big time. And so seeing that kind of disconnect, that was one of the bigger trades that we've ever had at Masters in Trading. It was one of our bigger trades because it happened so fast. It really happened really quickly. In this document, I haven't added it, but I will add it. I had an interview with Dan B., who's a client, whose futures account went from $44,000 to $180,000 after this silver move. Pretty freaking cool. And that's on YouTube. I will put that in this document, but under playlists, I have client interviews. There's 10 interviews or so, and that's Dan. You can check that out if you want. So gold, silver, oldest relationship, once in a while, it breaks down. And when it breaks down, it comes back. That was a big trade too, Chris. Thanks. Chris says, I remembered you called out GameStop. Wasn't that the biggest trade? That was a big trade. But yeah, so we called out GameStop before because of the short interest. And Jim Cramer ended up picking that up and ended up tweeting that it was the best coverage of GameStop that he's seen. It was very, very cool. And my YouTube subscribers doubled because Jim Cramer said something nice. Thanks, Jimmy. Going back to this chart before we move on, you guys just saw that bonus trade idea as the last slide. Earlier I said that we're buying platinum. We're buying platinum because of this. Going back to 2019, buying platinum on this pullback has been a good do. But not only that, you have plenty of things to hedge with. It's not like everything is selling off. It's really important to make sure that we're in the right products. And if you wanted to buy a metal right now, I would argue that platinum is the choice. That's why I bought some today. We went over futures in this, and I just wanted to give an overview of relative value trading, how we approach the market. I have so many people out there who are constantly just getting their time wasted, I think, by following a lot of charts and shorter term trading. So just wanted to give you a different flavor of how we approach the trade. I got one more trade for you. This is going to be a stock trade. It's setting up really nicely. Something I've shared with my community, but the chart is what I want to share with you guys, and also the trade. But the chart also shows how you can use the bond trading education, like that foundation, and bring it into other asset classes, but also bring it into stock options as well. So that's really the takeaway from this. In front of you, SQM, lithium, ALB, and then LTHM. It's a lithium company as well. LTHM is the blue, ALB, SQM. So here's a good site, guys. It's called Trading Economics. And we use this site because you can get the cash value of a lot of random instruments. Like, it's not so easy to get the cash price of lithium, but if you go to Trading Economics, you can. Now, lithium hit its low April 17th and has since rallied. So April 17th, watch this. So April 17th, if I come back here, April 17th, that's going to be right here. So the trade that I like is I'm long SQM. I like that lithium turned, but a great way to protect your position with SQM is you can buy puts in LTHM. So the trade is getting long lithium related product, and I'm doing that through SQM. You can buy stock, you can buy some out of the money options, and then you can hedge with this blue line. The reason that I am adding SQM is because of the bounce in lithium. So play around with that as well. That SQM, ALB, LTHM is in the PDF. The last page of the PDF, a little special, Masters in Trading Relative Value Futures class, 3 hours. You can learn all about it. And then a special for our live, only $47. It's a 3 hours, a well-organized futures course that I just finished making. Love to open it up for any questions that you guys have. Again, in the description, you guys will find this PDF. And this PDF, my intention was really just to give you an overview of how we look at the market, how we approach the market. Just checking in with everybody. We all good? Does anybody have any additional questions? Let me hear any thoughts too of how we can make these live streams better, or what topic you'd like for the next live stream. This was a blast. We'll dial these in, we'll get better at them. But I really appreciate everybody coming. If anybody has any additional questions, feel free to, you can leave a comment under this or just email me directly. You can email me at jonathan@mastersintrading.com. Thank you, everybody. Have an awesome night. You can show any live, I'm going to pronounce your name incorrectly. So what we're doing is I just opened up a new account with a company called Edge Clear, and we're going to be working on CQG. And so we're going to figure out how to work through CQG, and in our bond community, we're going to be all learning together. The trades that I like right now are the ones that I showed you as well. We are actively in this trade right now. This one right here. And as well, just so you guys know, or just have an idea for those who end up trading with us, we are in a community, and that community is sharing ideas throughout the day. So here's Matt helping somebody just explain the trade. June 21st, fight starting to work. Making sure you understand the trade. We originally liked the fight, but then we looked. We originally liked the fight, but then we looked for protection. And for the protection, we found the text. I bought the fight, we'll short the text. So for anybody who came late, guys, this PDF is in the description below. Does the Discord allow voice chats? I wouldn't be against it, but we're not using voice chats right now only because of me not knowing really what that is. Yeah, this is all for bond trading. This whole presentation was on relative value futures trading, explaining how myself, Jonathan Rose, at Masters in Trading teaches how to trade futures. So how the futures program works, guys, is this is the starter course. It's $47. The community is called the Fight Club, and the community is a 12-month community because of the learning curve. So what we want is we want folks to go through the education, to learn how we trade, to use the tools, and then once they're in Discord, there's 12 months minimum in Discord because we don't want the revolving door, because unlike stocks or options, this is a different approach. When we used to have a shorter term membership, we would have people come in there and everybody wants to talk about technical analysis or something that they're doing, and we're really focused on trading the same way. Okay, this was a blast. Thank you very much. We'll do this again soon. Let me know what you want the next topic to be on, okay? Thanks for joining, guys.